Welcome to the Crypto Prism channel. Let's first look at Bitcoin's daily chart structure. Bitcoin is currently at the late stage of a complete downtrend, not at the early stage of an uptrend. Why do I say this? First, let's look at this descending trend line. It is drawn all the way down from the high at 126,200. This trend line is very clean. Every rebound in between has been capped by this trend line. What does this tell us? It tells us that the daily level bearish trend has not been broken up to this point. This is the first very important premise. Now, let's look at the price structure. After falling from the high at 126,200, Bitcoin has followed a very standard trend-based decline. Highs keep getting lower, and lows keep moving lower as well. The lowest price reached around 80,600. This marks a phase low within this downtrend. After that, price did not continue to break down aggressively. Instead, it started to oscillate repeatedly within the 86,000 to 90,000 range. Pay close attention here. This point is very critical. This is sideways consolidation after a decline, a corrective repair, not an uptrend. Many people see consolidation and immediately start imagining a reversal. But on the daily time frame, sideways movement within a downtrend is by default a continuation structure. Now let's look at the MACD. When you look at the MACD, you'll notice a typical phenomenon. After forming a deep death cross earlier, the bearish histogram expanded continuously. This is a textbook trend-driven decline. Now, after the bearish histogram has started to shrink, it has begun to turn green. What does this mean? It does not mean the market is about to take off. It means bearish momentum is weakening, but there's still no trend level reversal signal. So the current state is still dominated by bears. However, the market has entered a resting phase. Now here comes the key point. The highest probability scenario is that price continues to consolidate sideways here, and after some time of consolidation, moves lower again to test support around 8,600. It cannot even be ruled out that price briefly breaks below that level. Why is this a high probability event? Because the daily downtrend is still intact, and no key structure has been effectively broken. The current rebound height is still too low, and does not have the strength required for a trend reversal. In other words, Bitcoin on the daily time frame is in a consolidation repair phase at the end of a downtrend, not a bull market launch or a confirmed bottom. A short-term rebound toward the 90,000 to 92,000 area is merely a technical rebound. If Bitcoin fails to firmly stand above the descending trend line on the daily level, this area becomes an entry opportunity for bearish traders. Only a high-volume breakout and sustained hold above the trend line could signal a reversal, but the probability is low. The biggest risk right now is misjudging safety. Short-term trades can focus on range-based rhythm, while medium-term positions require patience and waiting for a true trend change. Next, let's look at the 4-hour chart. On the 4-hour time frame, Bitcoin is still trading within a range after a decline. Not in a trending market. That means this level is neither a safe zone to chase longs, nor an aggressive spot to open shorts. Looking at the structure from the previous high at 107,400, Bitcoin experienced a very clean one-directional decline, all the way down to around 80,600. This marks a clear 4-hour time frame low. This decline is very important because it defines the nature of the current market. All current price action is merely rebound and consolidation after that decline, not a new trend. Now let's look at the rebound structure. After rebounding from 80,600, price climbed to around 94,000 at most, which corresponds exactly to the Fibonacci 0.50. This is a very critical piece of information. The rebound was capped directly at 0.5 and failed to extend. This shows it is not a strong reversal move, but a very typical post-decline corrective rebound. Now we can see that in the current area, price is repeatedly moving within the 90,800 to 92,000 range, near the 0.382 resistance level. Below, that is the former support at the 0.236 level, with prior low support around 86,900. Price is currently trapped within this 4-hour box. And this box has a clear characteristic. The lower boundary is descending, while the upper boundary is flat. This indicates that bulls lack offensive strength, while bears are waiting for a new starting point. Now let's combine this with the MACD to look at momentum. The current 4-hour MACD has recovered from deep bearish territory. However, the momentum is very weak. The two lines are almost moving together. This says one thing clearly. The market is hesitating, capital is on the sidelines. And this is not a launch phase. It is waiting for a directional choice. Now let's talk about the most critical part. The current market has three possible scenarios. The highest probability scenario is continued consolidation within the 86,000 to 92,000 range, constantly shaking out longs and shorts, and exhausting market patience. The essence of this type of market is preparation for the next directional move. In this structure, chasing highs gets you trapped. Buying the dip gets you shaken out. And emotional trading is the easiest way to lose money. The second possibility is an upside rebound toward the 0.382 Fibonacci level, with price in the 90,800 to 92,000 area, or even briefly holding above it. But I need to emphasize one thing. As long as the 4-hour chart cannot continuously hold above the 0.5 level, with price above 94,000, any such move should be treated as a rebound, not a reversal. The third scenario is downside risk. If price once again breaks below 86,900 and does so effectively on the 4-hour time frame, the market will return to a bearish rhythm, with the natural target being the previous low near 80,600. Once this scenario is triggered, the move is usually quite fast. Overall, the 4-hour downtrend in Bitcoin has completed one leg, but the conditions for a reversal are not yet in place. The market is currently in a consolidation phase, ahead of a directional decision. At this stage, judging direction is more important than trading. The truly worthwhile opportunities will only come from either a high volume breakout above 0.5 or an effective breakdown below the lower boundary of the range. The biggest danger in this entire phase is being too impatient. That's all for today's analysis. If you haven't followed me yet, please do so. See you in the next video.